Turbo binary options trading is a high-speed trading approach where trades are executed within extremely short time frames, typically between 30 seconds and 5 minutes. Due to its rapid nature, traders must rely on precise technical analysis and fast decision-making to maximize profitability. Unlike longer-term binary options trades, where fundamental analysis might play a role, turbo trading is almost entirely based on short-term price action, momentum indicators, and market volatility. The key to succeeding in turbo trading is understanding price patterns, using the right technical tools, and having a disciplined risk management strategy to avoid rapid capital depletion. A fundamental aspect of turbo binary options trading is the use of momentum indicators. Some of the most commonly used indicators include the moving average convergence divergence, MACD, the relative strength index, RSI, and Bollinger Bands. The MACD helps traders spot trend direction and momentum shifts, making it useful for identifying potential trade opportunities. The RSI is particularly effective in determining overbought and oversold conditions. When the RSI is above 70, the asset is considered overbought and may be due for a price drop, while an RSI below 30 suggests an oversold condition, signaling a potential upward movement. Bollinger Bands, on the other hand, help identify price volatility and breakouts by measuring price deviations from a moving average. Traders often enter trades when the price touches the lower or upper band, expecting a reversal. Candlestick patterns also play a significant role in turbo trading strategies. Patterns such as engulfing candles, doji, and pin bars are commonly used to confirm price direction before entering a trade. For example, a bullish engulfing pattern occurring near a support level may indicate a strong upward move, while a bearish engulfing candle near resistance suggests a downward reversal. Because turbo trades have very short expiration times, precise timing is crucial. Many traders enter trades as soon as a confirmation candle forms, ensuring they are positioned early in the price movement. Risk management is essential in turbo binary options trading, as the rapid pace of trades can lead to consecutive losses if proper precautions are not taken. Many traders follow the 1 to 2% rule, meaning they risk only a small percentage of their total capital on each trade to avoid significant losses. Additionally, market conditions should be carefully considered. Trading during high volatility periods, such as the overlap between the London and New York trading sessions, offers better opportunities due to stronger price movements. However, traders must be cautious of sudden news events, which can cause unexpected market swings. Some traders incorporate the martingale strategy in turbo trading, where they double their investment after a loss to recover previous losses. While this approach can be effective in certain market conditions, it is highly risky and can quickly drain capital if a losing streak occurs. Instead, a more sustainable approach involves consistent trade execution, backtesting strategies, and maintaining a trading journal to track performance. Ultimately, success in turbo binary options trading depends on speed, precision, and a well-defined trading plan to navigate the fast-moving market effectively.